What's up, Mortgage Coach community? Dave Savage coming to you live with Chris Lambert from Olympia, Washington. What's up, Chris?
Hey, Dave. Hey, thanks for having me. Really excited.
Well, it's good to have you. I'm trying to do more interviews of new loan officers that have come into the business, whether it's, hey, this was your very first year, or in your case, it sounds like this is going on your third year. Is that right?
Actually going on my fourth. I just wrapped up the third year. So yeah.
Well, it's a third year loan officer, so still relatively new. And you came in from another industry. What were you doing before the mortgage business?
I was a contractor for 25 years, self-employed in the construction industry here in Olympia. So I'm an hour south of Seattle, and I've lived here my whole life. So I was in construction my whole career up until lending.
Well, it was a good migration, and congratulations for being in the mortgage business and also elevating your success. And 2020 was a good year for you, right?
It was great. Couldn't ask for more. Yeah.
How did you do this year? Or, well, we're in 2021, but how was 2020 for you?
Yeah, starting out the year, I set a goal, a pretty high goal of 120 families served for 36 million. And we finished up, when I say we, I've got a team of two other LOs, 36.7 million for 123 families served. So awesome year for sure.
Yeah, well, congratulations. I mean, anytime you can help over 100 families, you are an elite team in the mortgage business. 2020 was a big year for a lot of folks, but for being in the business, I guess that was your third year. That's great volume. So I want to know how you did it, and I also want to know how has Mortgage Coach. And when I think of Mortgage Coach, it's technology that helps you deliver a better experience to families, and it's also community that makes you a better loan officer. So how have you used the Mortgage Coach platform to help you?
Sure. So I brought it on. I started in fall of 2017 and worked through, didn't close a loan then and closed my first loan in January of 18, worked through the year, hadn't heard of Mortgage Coach. So I just was trying to learn and bring as much value as I could, but really focus on learning. And I was looking for that, that value add that everyone talks about, other than working hard and being available, that only goes so far. So I learned about Mortgage Coach in early 2008 or 2019. My company did a rollout with it, and I researched it, and man, jumped right on board, and haven't looked back. So yeah, it's been the best thing, since I've started. As far as, like you say, the technology is great, but just jumping on the YouTube channel and Facebook and learning from folks that are doing it, I mean, couldn't ask for more.
Well, I love that. And for all you managers on this or folks that are leaders of companies, one of the reasons you should roll out Mortgage Coach from the top down is because Chris would have been left behind. Like, you probably never would have found it if it was just up for you to find Mortgage Coach, or it might have taken you another year to find it. In hindsight, do you wish you would have found our community and our platform sooner?
It would have helped. Absolutely. Yeah. Yeah. But I think the timing was perfect. I really feel like that first year I got my feet under me, and yeah, but it really made a huge difference. Looking at my numbers, there's no question.
Good. Well, let's go through it. So what do you do as a mortgage coach? Like, how do you use the platform, both from a learning perspective and from a presentation perspective? Let's just go learning first. What are the things that you do to learn from the community?
Well, learning first, I guess, from the community itself. Structure, team structure, business planning, just, scripting. I'm one that I'm not for, the absolute dialed in script, but just some of the answers to some of the tough questions that we get hit with all the time, rate shopping and how to set yourself apart. Just absorbing. I got into this when I was in my mid 40s, and I made a commitment that, I wasn't going to try to reinvent the wheel. I was just going to kind of absorb from what, look at folks that are doing it, and not imitate, but take bits and pieces from what other folks are doing and try to build it into my own business plan. So yeah, I mean, you've got so many amazing people on your Facebook and YouTube channel. It just all the information's there. So
any particular videos stand out? I know in 2020, the number one video of the year was "What's Your Rate?" So I don't know. Did you happen to watch that one and hear how all the loan officers answer the question, "What's your rate?"
Yeah, I did, for sure.
Any other interviews that I did or people that I've interviewed that have stood out as more valuable to you than others?
I would say, since we're just starting out 2021, some of the business planning that, at the end of last year, I built my business plan in October. I revised it in November. And then after watching a bunch of your videos, I revised it again, for this year. And now I feel like we've got a solid plan. So I would say that, but, one that there was a Jeremy Forcier simple question, how to convert a lead within your, when you've got your, a client that's under contract moving forward, just how to convert that thank you. That's something I think it was the way I was raised. I realized when I saw that I'm not one that receives compliments well, so I could quickly diffuse that. And just that conversation you guys had about, they're thanking you for a reason, they want to help. So that's what I've used. And I think within a week I had another lead because of it. So
I love that. Well, hey, I think of all the ideas I shared from the mortgage coach stage throughout 2020, I heard more emails, more text, and it was like a 2-minute conversation. I think I've promoted it many times, and it's like a 4-minute video, how to generate referrals from clients in process. And I mean, hundreds of thank yous. So congrats, and I'm glad you got value from that. Well, let's dig into Mortgage Coach, and let's see how you're using Mortgage Coach. Maybe you could tell us a few stories, show a few strategies, share your desktop, whatever you want.
for sure.
But which one do you want to go through first?
I could go through, well, I use it in a lot of ways. I use it for marketing. I think it's a great marketing platform, send TCAs out for different strategies out to real estate folks. I've got a handful of TCAs that have a lot of views because, just a general one to show, like a seller buy down or just the different, different strategy structures. So I use it for marketing. And then I use it 3 different ways when I'm working with borrowers. So I'll go ahead and I'll bring up a purchase one that I just recently sent out. Just take a second here.
I'll tell you when I see your screen, by the way.
Yeah. So the first step when I have a conversation with the borrower, depending on where they're at in their experience in the process, I like to make sure they understand what it means to, what goes into interest rate pricing, right? Can you see my screen there, Dave?
I can. I want to comment real quick. I like the way you use your picture. I like the video. How often do you add a video to it like this?
Pretty much every time.
Nice.
Yeah. Yeah.
Great job on that.
Thank you. So, so I had a conversation with the borrower initially. This borrower in particular was a first-time buyer. He's a dentist, so a high-income earner. But I wanted to make sure, I know he was shopping. I wanted to make sure he understood what goes into interest rate pricing without going too far into detail. I just explained, that you'll have an interest rate menu, and that menu is different for every borrower. And at the top of the menu is kind of the interest rate with the least amount of closing costs. And you can always buy it down from there. You know the drill, Dave. But I want to make sure I frame that so that when he's looking at my TCA, maybe comparing it to another fee worksheet, that he knows that this isn't necessarily the lowest rate that he could get, more of a starting point. So he was looking at mainly in that 450 range, but he said, maybe as low as 400,000, maybe as high as 500,000. And the goal was about 2,300 out of pocket. So this 450, is kind of his sweet spot, what he was looking for. But again, he asked for, 50,000 lower and 50,000 higher. So, I obviously include I use a multiplier for the county we're in to estimate taxes. And I also, put an estimator in there for insurance as well. But the one thing he said, and this is where I think it's important to really listen to the borrower, he also said that he might wait till the summer. And in our market, I'm an hour south of Seattle, and home values are going up about 10% per year. And of course, we all know what interest rates are doing, at an all-time low right now in January. And I just wanted to frame it so that he knew what, buying later. So this is the 4th column. So I put it in quotes. What a 450,000 purchase might look like, that house right now that's 450, what it could look like in 2021 if the value of the home goes up in, the way it has. So I kind of added 5% to show what it might look like. So of course the value goes up, purchase price goes up. And then I also mentioned as interest rates change, and I explained this in the video, no one knows what the rates are going to do. But looking back 6 months, rates were around this range. So what that means when you're comparing, the $450,000 purchase later in the year as compared to right now, you're talking about $250 difference per month, let alone more cash to close. So I put that out to him. He's still thinking, he's still chewing on it. But of course, I CC'd this to the realtor and in a group text actually, and included it that way. So I just like to think a little outside the box and really, listen to what they're looking for, but, give them a little something maybe they haven't thought about.
Well, two things I love about it. You're tailoring. You're asking the client, what are their goals? What are their questions? I think a lot of people say, oh, you're thinking about wait until summer. And then they just start talking around that. You showed him. You said, well, what do you think is going to happen to rates between now and then? And you guys agreed on a number. What do you think are going to happen to values? They're probably going to go up some more. And so you were really able to net out for this family. And if I've seen it right, that $450,000 house that you want, you're going to pay more for. So you're going to lose about $20,000 in equity, and it's going to cost you $262 more. So you were just able to not put pressure, not sell, just help them make an informed decision that's a $262 monthly decision and $22,000 in personal equity. Now what do you want to do?
Exactly. Yeah.
Well, heart of a teacher, great education. You clearly have been watching some of our videos and going through our training. Have you ever been, every Wednesday we do black belt training. Have you ever been to one of our training programs?
I haven't. No.
Yeah. Well, I want to remind you and anyone listening to this, every Wednesday, 11 o'clock Pacific, there's a success manager teaching and training on how to be a black belt and how to do the 12 strategies that a black belt needs to know how to do a move up analysis, how to do a cost of weighting analysis, how to do a rent versus own. So cool. I like this a lot. How often do you do something like this?
So I do this first step with every borrower, every purchase, especially. And I do, unless they have an exact price point dialed in, typically they, as some folks might say they want to buy in the 450 range, but then when you ask what their monthly budget is, that doesn't always align. So right. I like to start with this initial, comparison that shows a range. And then from there, so I present it really in 3 different ways. Once they dial in a range and start shopping, I'm available to build one out for every, the homes that they're looking at, so they can know exactly what that's going to be. And then even further, once they get under contract, I use it to compare different interest rate options and strategies, as far as buy downs and things. So it's really like a 3-step approach on each borrower.
Well, I love it. Hey, if you could, before we show the next total cost analysis, I know you have another one to show. Could you go into the advice engine real quick where you create these? I want to look at something, and I want to remind everybody, once you log in, if you could go to the settings tab.
Do you see it, Dave? Am I sharing?
No, I still see that same scenario. You haven't shown a different one. Now you're not sharing your screen.
Sorry, one more time.
So, all right, guys. So, and remember, if you are relatively new, within 3 years, so go to settings real quick. We want to help make you a black belt in mortgage advice. So clearly you can see Chris is a black belt. Chris, click on that little box just to the right of where it says TCA is created, and there's a little box with an arrow. Click on that real quick. I want you guys to see, like, he's gone to black belt. He's only got one more achievement. That is a red belt grandmaster. That's 1,000 total cost analysis. But guys, every loan officer, we have people that are brand new. It's their first year in the business, and you can become a black belt. It's hard, like when you don't have past clients and you don't have leads, but you can do it. Also, go ahead and close that real quick. I want you guys to make note that he has added 390 videos. So that looks like about 70%, 75% of your TCAs have a video. That's exceptional. I recommend everybody's at least 50%. And then you'll notice, guys, he's like 9 times views. So 3,134 views. So that means he's being very effective, that when he shares his link, it's getting, do you include the realtor on it?
Absolutely. Yeah.
And I'll bet you're super intentional. Like if they mentioned another person that's involved in the decision, you're intentional about telling them to share the link.
Mhm.
It looks like you're really effective at doing that.
Yeah. Yeah. I think it's fun. One of the things I don't hear about much, from other LOs within this forum is that, we get emailed every time this is viewed. And I feel like it's huge value to the borrower. So I feel comfortable saying this, that I'm a fisherman. And for me, it's kind of like, it's like as a little kid fishing with a bobber and worm. And at 11 o'clock at night, when I start getting pinged that people are looking at these TCAs, that it's kind of like fishing, it's like the bobber's going down. And a lot of times, the next morning, I hear from the borrowers and they're super excited and they're ready to go. So it's kind of one of those things that it works for us while we're hanging out with family or we're sleeping. And yeah, it's great. So we do get a lot of views on each TCA.
Well, I've never heard that analogy. I absolutely love it. Now I'm a fly fisherman. I'm not a bobber fisherman.
Yeah.
But I did bobber fish at one point in my fishing career. And I love that though. And I can totally get that. And even when you're fly fishing, they're rising.
Yeah.
You can see when the fish are coming after it, or you get a little nibble. So I dig that. So do you have another total cost analysis to share?
I do. I'll share one real quick. I've got a refi TCA, and this is a friend who we did a cash out refinance for. Can you see my screen, Dave? Should load up in a sec.
I do. I see it. Nice job, by the way. I can see how quickly you're going through this. You've done this before.
Oh yeah.
Yeah.
So Kevin is a friend of mine who wanted to remodel his house last year. We did a cash out. This current is his cash out refinance that we did. You got a great rate, but as you guys know, everything's lower now. So we were looking at possibly doing a rate term for him, and this was just last week. And after talking with him, he let me know that he's paying $2,000 a month. So he's paying, this reduction payment. He's paying $278 more per month. So I wanted to make sure I had exactly, what his current mortgage is, because of course down below the freedom point, he's trending right now to pay it off in 21.3 years. So important that I use that as the baseline, because that's the accurate, kind of baseline to go from. So we started with this 30-year strategy here to the right. He asked for a 30 and a 15, but we started with the 30. I call them strategies, strategy 1. And of course, 2 3/4 on the rate, again, at the top of the rate menu, without buying it down too much. And, we could save $388 or reapply that back to principal, same payment he's paying now, and, pay it off even sooner. And then of course I'll delete my video here. And then when you look at the interest savings, it speaks for itself, right? On the green bar chart there in 22 years. And I did that because that's kind of the longest term that he'll have, really comparing it to his current. He asked for 15 as well. And after running numbers, he was ready to go. He was excited. This all made sense. And as we're having the conversation, he said, to step back. So he did the remodel last year, right? Long-term play. And as we're talking, he says, well, what's the one thing that would make this not make sense for us? And I said, well, if you moved soon, right? If you sold the house, and, there's a tipping point in any refinance where, you start, the savings becomes more than what you put into it. And, well, he said, well, we have talked about buying a lake house. It's like, okay, how far out is that? And he said, well, it could be a year, it could be 3 years. I'm not quite sure. So that's when I used the orange bar chart, and really dialed in kind of that tipping point. What's the shortest amount of time staying in this refinance that would make the most sense for him? And we decided 33 months is, if he stayed in there any less than 33 months, then it wouldn't probably make sense. So with this one, and I love this about the platform, he decided that it wasn't in their best interest, because we kind of weighed the pros and the cons. He said, gosh, we could, we might leave in a year, but it might be 3 or 4 years. And, I asked how he would feel about both sides, and he decided to just kind of pump the brakes for now. But that's the thing with your platform, it allows us to really give good advice. And there's times where it results in of course, not getting a loan, but that's in the best interest of the borrower at times. So,
Yeah.
yeah,
Well, I interview the best of the best, and it's not about winning every loan. It's about giving the best advice for every loan. And if you do that, you will close more loans.
great.
You will get more referrals. And so I love it when the advice is delivered and it helps the customer. I do want to remind everybody, and you have this, you may or may not know this, Chris, but if you did have debts and you did want to consolidate those, there's a new feature in Mortgage Coach where if you pick a debt consolidation loan in the wizard, it will show that. And now it will show all of their debts. It will allow you to analyze those short term or long term. And if there is a net benefit, it'll net out that net benefit. Like, here's your current situation, here's your update, and here's the savings. So now it doesn't always make sense to consolidate debts into a refi. And we didn't create this to just be this debt consolidation selling machine. We did it so that you can help families make an educated decision with full transparency. So make sure you're familiar with this report
Mhm.
and this feature. We are looking for great stories where Mortgage Coach helped do a debt consolidation analysis. And guys, I want to hear stories of where it didn't make sense to do a debt consolidation analysis, but Mortgage Coach helped you provide clarity, transparency, and confidence for the borrower. I'm looking for those. So Chris, I don't know if your game, be on the lookout for a chance to use this.
Oh,
And
yeah,
if you do, I would love your feedback on it.
for
So
sure.
let's go into wrap up mode and advice for new loan officers. I'm going to start with, if you're a new loan officer and you're listening to this, I don't care whether you've been in the business for 1 month, 1 year, 3 years, Mortgage Coach is a great place to start. We've got a new loan officer playlist. I designed that playlist for a lot of friends whose kids got into the business. My kids aren't old enough to get in the business yet, but if they were, I would say start with listening to our new loan officer playlist. It's in our YouTube channel. I would recommend that they start with Mortgage Coach because you learn the loan business, you learn the strategy behind it. And so, and also every lead is super precious. So for you to be brand new in the business and to be able to present loan options like a Varsity Pro, at least you have the confidence of that and you have a better presentation. But Chris, one, do you agree with that? Getting into the mortgage business, Mortgage Coach is a great place to start.
I do, yeah, without question. My branch manager, he's the one that recruited me into this industry. He asked me a while back, what I would attribute to my success to, and I mean, without hesitation, is Mortgage Coach. I would say, just the community itself, really listening and just absorbing, taking pieces from other people that are doing a great job and making that your own. And like I said, not copying or emulating any one person, but finding a style of your own, but there's so many people on this forum that can do that. And yeah, I mean, as far as TCAs, Dave, I don't know many people that can run, all these different scenarios and figure out the total interest, expense in 20 years. And I mean, there's some amazing people that can do pretty quick math, but I don't think there's a quicker way to do it than a TCA. So, you can look at different options. That way you're a little quicker on your toes when borrowers are asking you, if we do this, how might it impact that? If we mess with MI, which is something that you can obviously do on Mortgage Coach, how can we make those adjustments and how does it impact me long term? So yeah, I learned a lot just by making mock TCAs and making little adjustments then, from here. So,
Well, Chris, it's great to have you active in our group. I think one of the ways that I connected with you is you either asked a question or you commented in our Facebook group, and that led to you and I having a dialogue. Again, it's leaders like you playing it forward that makes our community so good. So thank you. Congratulations on, finding a second career, going from construction to the mortgage business. I mean, I don't think there's no better industry than the mortgage business, guys. So, and I think it's a great time to bring new loan officers in. If you're a leader and you're recruiting people into the mortgage business, this is actually a really good conversation that you might want to share with people that are like on the fence, whether they're brand new or they're thinking about changing careers. Feel free to use our content to help loan officers see the light in the mortgage business. If you have questions, put them down below. If you're a new loan officer, I want to create more content for you. So if there's any ideas you have or people you want me to interview or questions you want me to ask, put those in comments down below. Chris, any final words of thought before we wrap it up?
No, the reason why we connected, Dave, was that I reached out to you and your team and just thanked you for what you guys do. I mean, it's, I'm sure you hear it quite a bit, but man, it just makes our jobs easier. It helps us provide, the best level of service we can, to really set ourselves apart. So I know you said you're a fly fisherman. I'm a bass fisherman, and we're not too far away. So maybe once all this COVID thing shakes loose, we can go fishing on Hood River. I'll take you to 70-mile-an-hour boat ride in my bass boat.
Oh, I mean, by the way, game on. Just tell me when Ryan Hills took me bass fishing in his 70-mile-an-hour bass boat, and I was like hooked.
Yep.
I mean, you're standing up, you're moving. I bass fished for the first time last year with Ryan Hills, and oh my God, I'm in love. So I still like working the stream and fly fishing more, but I'm up for a bass fishing anytime you want to go. And one last thought, because that's right. You sent a really compelling thank you and a power of thank you. Like, you took time out of your day to say thank you. Just know that I appreciated that. All right, guys, this call is a wrap. Share this with your mortgage friends, and hopefully you're getting value from the Mortgage Coach community. Take care, everybody.
Thanks, guys.